Alright, so let's go ahead and finish out now Chapter 9. So we talked about the income statement, we talked about the owner's equity statement, and now we're going to move on to the balance sheet. The balance sheet is really the accounting equation, just kind of spelled out in one report, in one form. So it's your assets equals your liabilities plus your owner's equity. So at the end of the period, or really any day, if you want to check and see really what the value of your business is, you would pull up a balance sheet which would show you a comparison of all three of those things. It says a balance sheet is a report of the balances of the permanent accounts for a specific date. Now remember, our permanent accounts are those accounts that the balance continues on. So if at the end of the month the balance was $500, you would start off the next month having $500 in that account. There are three accounts that we discussed back in Chapter 6, which were our temporary accounts. And the temporary accounts are revenue, expenses, and withdrawals. So the easier way to say is that all the other accounts, the permanent ones, are the ones that go in the balance sheet. Revenue, expenses, and withdrawals, these are all accounts that start over again every month or every period with a zero balance. Those are not included on the balance sheet. You would actually include those, the two of them. You would get your expenses and your revenues would show up on the income statement, and withdrawals would show up on the owner's equity statement that we just did. So let's get into it. Obviously, what the business owns, which are the assets, what the business owes, which are your liabilities, and what the business is worth, which is your owner's capital. So here's what it looks like. There are two different things that you need, two different forms that you need to get all the information needed in order to fill out your balance sheet. You have your worksheet that you filled out, and then you have your owner's equity statement. The owner's equity statement that you prepared right after you did the income statement and the list of financial reports that we do at the end of the period. So here we go. Let's take a look. Like everything else, the first step is always to give it a good heading, right? The who, what, and when. The who is the name of the company. In this case, if you look, Zip Delivery is the name of the company that we're preparing the balance sheet for. Next would be what the sheet is. And this one is a balance sheet. So you would write the term balance sheet on the heading. The next one would be for a period ending, for the date. And that's going to tell you the exact day of your assets, your liabilities, and your owner's equity account. So we have balance sheet, October 31st in 2018. Now there's really three sections to the balance sheet. The first one are the assets. So you would write the term assets, and then you would go ahead and list all of your assets. Once you list all of your assets, remember the listing column and the totaling column, you would list all of your assets, and then finally you would write the term total assets, and like we always do, we write one line, and then we go ahead and we write the total of our assets in the right column or the totaling column. The next, remember, assets equals liabilities plus owner's equity. So the next section that we want to cover is the liabilities. So we'd go to the worksheet, we find all our liabilities, we have two of them, remember they start with the number 2, and we would list them underneath the term liabilities. So we write liabilities, we list them, and because there's two, we would list them in the left column here, we draw a line, and we would put the total over into the right column and write the term total liabilities here that lines up with the total. Now, the equation is assets equals liabilities plus owner's equity, so we're not done yet. So we just leave liabilities there for one moment. As you look and see, the assets have two lines underneath it because they're on the opposite side of the equation. So assets, as soon as you come up with your total assets, you would put two lines underneath to show that nothing else gets added to it. But because it's assets equals liabilities plus owner's equity, we're just going to leave the total of liabilities there for a minute. And we're going to go to their next section, which is owner's equity. All right, so now we have owner's equity. Our owner's equity account is capital. And now we have to find the balance of capital. Now there is only one ending balance of capital, so we have to put it in the totaling side. So that would go over into the right column, right? Now here's the tricky part. You get the ending balance of capital from the owner's equity statement. You don't get it off of the worksheet, and I see this happen often, that it's a big mistake that people make. You actually get the ending balance of capital off of the owner's equity statement that you made. It's right here listed on the bottom. Those two numbers match up, and then finally, the last step would be adding the total of your liabilities and owner's equity, which would equal to $37,775. If the total liabilities and owner's equity matches with your total assets, then you've done the balance sheet correct. And that concludes Chapter 9.